Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to talk a little bit more about some of the angst that's in the capital markets, fairly negative sentiment as we look through the indices around the world, and we've certainly come well off the highs from earlier in the year. There are a couple of issues that are the major headline risks right now. One of them is the debt ceiling issue that's being talked about in the United States. Kris, that's Obama needs to get $2.5 trillion approved before August the 2nd, or the United States will face a technical default and the potential for a government shutdown. Now, we think that that outcome is fairly unlikely. However, it points to some serious issues going on down there with their debt and deficit, and some of the things that they need to do to straighten that out. One of them, Kris, probably most importantly, is going to be the parties are going to have to find some way of coming off their extreme positions to get some common ground on how to deal with this.
That's right. There's going to have to be some compromise. So we think at least initially they'll get the debt ceiling raised, but the issues around cost cutting, cutting expenses, raising taxes, personal and corporate tax reform are all likely to become major topics in next year's presidential election. And that's going to make it a very interesting year, I guess, of campaigning.
Yeah, those issues have the potential to be extremely polarizing down there on the political front. In the meantime, they've got to get down to business down there and get some of these things fixed. Just recently, the S&P put U.S. Treasuries on a negative credit watch, and that kind of just snuck by under the radar screen. Some of the headlines picked it up. Some wrote stories about it, some didn't. But that is potentially a very important turning point in this, because what that kind of means in our world, Kris, is S&P, which is the credit rating agency, has given them 90 days to put forward a plan to significantly deal with this debt and deficit issue. And if you layer on top of that the political strife that's going on, that seems almost like an impossible task. And then if they do get to that downgrade, Kris, their cost of borrowing is going to go higher, which exasperates the problem all by itself.
That's right. So even if they get the debt ceiling raised, but they haven't come up with any concrete long-term plan that'll bring the deficit down and start to attack that debt, likely Standard & Poor's will continue to look at a downgrade on their debt.
Kris, this is leading to a lot of strife in global equity markets. We just saw U.S. Treasuries, the interest rate there go down. That's the flight to safety. Gold going through the $1,600 an ounce. That's the flight to safety thing. I think there's a lot of investors that really aren't quite sure what to do. There is a little flicker of hope on the horizon. We're just going to be getting the second quarter earnings numbers. It's too early to give a first blush on them, but that could add some positive tone to the market. But again, we're back to what should somebody be doing here?
Well, that's right. And all along we've said, stay with high quality, focus on yield, own things in your portfolio that pay you so you're not relying solely on growth going forward. And it's okay to sit in a little bit of cash, because we think with all of the volatility that we're seeing in the markets, there could be some buying opportunities just around the corner. And corporate earnings, we expect them to be actually pretty good, and probably heading into the fall should see some improvements. So that could bode well for a little bit of growth coming here in the second half. We want to thank you again for your questions and comments. Please keep them coming. If you have any questions about today's topics or any other things on your mind, don't hesitate to contact Grant and I at TwoInvestmentGuys.com.
Join us next time when we're going to talk a little bit more about some of the earnings we're seeing, because we'll have more data at that point. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.